The shooting star is a bearish reversal pattern. It consists of only one candle as displayed in the video here. The real body can be either colour, red or green, or black or white depending on your chart settings. The red, of course, is slightly more bearish than the green, and I'll demonstrate that shortly when we discuss the psychology or sentiment of the pattern. The upper shadow is at least 2 times the size of the real body, and ideally there's no shadow below the candle. However, a very small shadow can be acceptable. Remember, we rarely get textbook examples, and we need to train ourselves to read the sentiment of the candle, as discussed in earlier videos, rather than getting too wrapped up in identifying exact textbook patterns. The setup leading into a valid shooting star reversal pattern must be an uptrend. If you don't have an uptrend, then it's not a valid shooting star pattern. And ideally, we'll see a gap up to the shooting star. Of course, this won't apply to continuous markets such as Forex, but ideally, we're looking for an uptrend with a close of the candle preceding the shooting star pattern, say for example here, and then price gapping up on the open to start the shooting star pattern here. Confirmation of the trade will be price trading below the candlestick pattern. The level of confirmation required will vary depending on the trader's risk profile. Aggressive traders may enter as soon as price moves below the low of the shooting star here. More conservative traders may wait for a close below the low, so next candle closing, say for example down here. Others may wait for a complete real body or even a complete candle below the shooting star low. Use whatever works for you in your backtesting. Just be aware that the more confirmation you seek, the further the prices move from the ideal entry point, leading to a potentially higher risk trade. Confirmation is not always good, but that's a subject for another future video. So which of these are shooting star patterns and which aren't? Well, all exist at the top of a trend. All have an upper shadow greater than 2 times the size of the real body. So all of them are valid shooting star patterns. Let's look at the psychology of the pattern now to see who is in control, the bulls or the bears. The bulls continue the uptrend by gapping the price up at the open and then driving it to new highs. Realise that at this stage the candle is a large green candle and everything is looking bullish. However, at this stage the bears then fight back strongly and drive the price back down to the close. Higher prices are rejected. A red shooting star is more bearish than a green shooting star due to the bear's ability to force the close of the candle below the opening price. Notice here the green candle opens here at the low, goes to the high, and the bears are not quite able to drive prices down that far again at the close. However, the red candle opens here, goes to the highs, where price is then driven down below the open to close here. So the red candle displays a more bearish sentiment. Have the bulls been overcome by the force of the bears? Possibly, possibly not. We need to see confirmation through price trading below the low of the shooting star candle here. However, we can say at this stage the bears have shown significant strength. If we're long, then this may be a good time to prepare an exit plan, perhaps tighten up our stop. Alternatively, if we're looking for an entry short at, say, at resistance, this is perhaps exactly the setup you've been looking for. Now we just need to wait for confirmation of price trading below the low as a trigger to enter short. Let's look at 2 examples. Firstly, in the 5-minute gold chart, we have an uptrend leading to a green shooting star candle right at the top. The upper shadow or tail is greater than 2 times the range of the real body, showing a bearish rejection of higher prices. Confirmation was price trading below the low of the shooting star candle here, leading to a change to a downtrend. Note that the reversal patterns are useful both for entry or exit. Entry in this case in the short direction if we're trading the reversal when price trades below the low of the candle for this move here. Or exit long if we're trading long, we're trading in the trend or in the direction of the swings. Shooting star pattern, tighten our stops, exit on the trade of prices below the low of the shooting star candle. And here we have a 30-minute Forex chart, British pound, US dollar. Note the rapid up move with decreasing momentum towards the top, leading into a shooting star pattern and rejection of higher prices. Note the small body with an upper shadow of, in this case, exactly 2 times the size of the body. We have a small lower shadow in this case, which is fine. Price trades and closes below the shooting star on the next candle here. triggering perhaps an exit if we had been long during the rally, or a great entry short if we're trading the reversal and this move here.